ZScaler stock definitely scaling up the price wall, jumping up to continue a nearly 8-week uptrend, especially after its Q3 earnings report, which showcased positive trends despite the current cybersecurity earnings slump. One of the standout achievements was the company's best-ever total contract value, TCV, bookings, which exceeded $1 billion. This milestone was complemented by remaining performance obligations nearing $5 billion, indicating a strong pipeline of future revenue. The growth in new logo annual contract value, ACV, was impressive, with a year-over-year increase of over 40%, while total new ACV also grew in double digits. This suggests that ZScaler is successfully expanding its customer base and increasing revenue from both new and existing clients. In terms of financial performance, ZScaler maintained a robust annual recurring revenue, ARR, of approximately $2.9 billion. This marks the third consecutive quarter where ARR has grown by 23% year-over-year, demonstrating consistent and strong revenue growth. The company's ability to generate free cash flow was also notable, with a free cash flow margin of 28% combined with a revenue growth rate of 24%. This resulted in a Rule of 52 performance, significantly surpassing the industry benchmark known as the Rule of 40, which measures a company's revenue growth rate plus its profit margin. Such performance indicates that ZScaler is not only growing rapidly but also efficiently converting its revenue into cash. Furthermore, ZScaler continues to expand its platform across various key areas, including Zero Trust Everywhere, Data Security Everywhere, and Agentic Operations. These categories are approaching $1 billion in ARR, highlighting the company's success in diversifying and broadening its offerings. This expansion is crucial for long-term growth and demonstrates ZScaler's commitment to innovation and meeting evolving cybersecurity needs. However, there are challenges that ZScaler faces. The macroeconomic environment remains uncertain, leading to cautious IT spending among customers. This uncertainty can impact the timing and closure of significant contracts, particularly as ZScaler faces increased scrutiny over large deals. Additionally, the company's total gross margin decreased slightly to 80.3% from 81.4% in the year-ago quarter. This decrease is attributed to the introduction of new products that prioritize faster go-to-market strategies over margin optimization. While this approach can drive growth, it also means that margins might be under pressure in the short term. Looking ahead, there are potential variables that could impact ZScaler's future metrics. The company's success in selling bigger bundles and facilitating faster upsells might lead to variability in the dollar-based net retention rate. This could affect how revenue is recognized and retained over time. Moreover, ZScaler's acquisition of Red Canary, valued at $675 million, is expected to have a largely neutral impact on the FY26 consensus operating margin. This suggests that while the acquisition may not yield immediate significant financial benefits, it is likely part of ZScaler's long-term strategy to enhance its capabilities and offerings in the cybersecurity space. Overall, ZScaler's strong Q3 performance, marked by significant TCV bookings and robust ARR growth, positions the company well despite the broader challenges in the cybersecurity sector. Its ability to maintain high growth rates while generating substantial free cash flow underscores its strong market position and operational efficiency. While challenges such as macroeconomic uncertainty and potential impacts on margins and retention rates exist, ZScaler's ongoing expansion into key areas like Zero Trust and data security, along with strategic acquisitions, sets the stage for continued growth and innovation in the cybersecurity landscape. When looking at how ZScaler manages its expanding product portfolio and ensures sales focus, particularly with the introduction of ZFlex, a flexible purchasing program, CEO Jay Chaudhry explained that the company uses a two-tier sales model, where the core sales team covers all products with an account-centric approach, while specialized teams focus on newer product areas. ZFlex was developed in response to customer demand for modularity and flexibility, allowing customers to try and swap modules without going through repeated procurement cycles. This program has already shown significant traction, contributing over $65 million in total contract value, TCV, bookings in its first quarter. Regarding the macroeconomic environment, Jay Chaudhry noted that while the overall spending environment remains challenging with tight budgets, cybersecurity remains a priority for organizations. Specifically, Zero Trust architecture and AI security continue to be key areas of focus, and ZScaler's business has not been significantly impacted by the economic uncertainty. The company did not experience a softer April, likely due to its focus on software rather than security appliances. ZScaler works closely with its customers to reduce costs and become a strategic partner, which has translated into annual recurring revenue, ARR growth. CFO Remo Canessa elaborated further on the structure and impact of Z-Flex deals on ZScaler's financial metrics. Z-Flex deals provide customers with flexibility in adopting and swapping modules at predetermined pricing, reducing procurement cycles. These deals are typically longer in duration, moving from 3 to 4 or 5 years. ZScaler plans to transition from billing to ARR as a primary metric in fiscal 26, which aligns with the flexibility offered by Z-Flex. This change reflects the company's focus on recurring revenue growth and its commitment to providing customers with flexible and modular solutions. The acquisition of Red Canary was also highlighted as a key strategic move for ZScaler. Jay Chaudhry emphasized that the acquisition accelerates Zscaler's vision to become a leading player in the Security Operations Center (SOC) market. Red Canary brings experienced detection and threat intel engineers, sophisticated agentic AI technology, and a seasoned go-to-market team, which complements Zscaler's existing data fabric technology and enhances its security operations solutions. This acquisition is expected to drive growth and innovation in Zscaler's security offerings. Jay Chaudhry also explained the role of Branch Connector in new customer wins. The Branch Connector, now a plug-and-play appliance, simplifies branch infrastructure by integrating zero-trust branch connectivity and device segmentation. It has been instrumental in attracting new customers, with 59% of zero-trust branch buyers being new logos. The solution addresses customer pain points by eliminating the need for multiple legacy network devices, making it an attractive offering for organizations looking to simplify their network infrastructure and improve security. For more on stocks and crypto, follow Ascencore. Thanks for watching and have a nice day.